Yeah, and so just the way that it varies, like in the supermarket, for those of us that aren't in food service, the food service industry, it varies, from the wholesale level. So that's a constant wave, and most places or most establishments, I mean, you're not changing your menu price like as the market changes, so you just kind of sitting there. You're like, okay, I got to know when to raise my price because at a certain point you killing your margin. Remember, we just working on 16%. I call it 15%, so I can do some quick math if we need to.
Mm-hmm.
15%, every penny counts. Every penny. I didn't say every dollar. Every penny counts. So how do you manage that? Accounting system. I got to throw that in there real
Of
quick.
course you do. Of
Just
course.
like that. Throw that in there.
Of
But
course.
that's not what we're here talking about. What we're talking about is getting from this fanatical, sexy gross revenue number down to what you keep, which is net profit. So you got your cost of sales, and then you have your overhead. And now the difference between the cost of sales or cost of revenues and the overhead is that the overhead, you have to pay that whether you make a dollar or not. So overhead, like in a restaurant business, your rent. If you get no customers,
Still gotta pay
you
rent.
still got to pay your rent. If you got, insurance, you have to pay. Utilities, you have to pay. All these things, if you do advertising, these are the types of things that you have to pay. And you may say, well, why would I have, because you're like, well, I got to have staff, if I have to pay. But the one thing about that is especially in food service, you would probably send people home if nothing was happening. You was so it varies, and it's tied into my income. Like, if I got 4 people in and we slow, I might send 2 home or 3 or all 4 and man the shop myself. Be like, yeah. So, so, this is just a brief overlay, like just for people, and this is part of my week. Like how you go from these gross income numbers down to the net, or for our layman's terms, what you keep in your pocket. So how you go from what you bring in to what you keep. And it's an exercise. It's something that we go through every day or every other day. We talk about ways to adjust this. But we have to be in tune to these numbers. And I think the bigger thing here is how we always talk about being in touch with your numbers, being in touch with them. Too many business owners are out of touch with their financial reality. They just not. What they're in touch to is, well, how much am I have to pay in taxes?
Mm-hmm.
But spent the whole year, like going back to this restaurant thing. So look, I'm gonna do easy stuff. Say your you sell your plate. You got one dish. You got the best whatever. I don't know what it is. Doesn't matter. $10, right? You sell it for $10. On in last year or last month, your cost for doing this thing was $5. Your food cost was $5.
Mm-hmm.
And you gotta pay all this other stuff, right? That's all the overhead still gotta come out of there. $10. We still ended up with $1.50 at the end, right? So
Mm-hmm.
now something in the world happens, boom. War and or cow famine or something like that. Say I'm thinking hamburgers. I don't know why. All right. Now it costs you $6.50.
Mm-hmm.
Your food cost is $6.50. But guess what? But you don't change your what you charge, right?
Right.
You no longer have any profit whatsoever. But you don't change it because you still got money coming in.
Mm-hmm.
So you don't sit there and look. You like this, but then at the end of the month, you like, wait a minute. Why don't I have any money? I'm making sales. Heck, you can make more sales than you did the previous month.
Mm-hmm.
But because of the cost of the goods went up, you don't have any money.
Mm-hmm.
What happened? I don't know. You have no idea. But you don't sit back and take the time out and be like, well, yo, you know what? This thing cost us, it ate up all our profit. And what we didn't do was change our price to go from $10 to $11.50 to keep the same profit margin. Because and also think about the fact that because everything is cyclic, if I
Mm-hmm.
get to $11.50 and my price goes back down to $5, we all know ain't nobody gonna lower their price like
Right.
that. That's not gonna happen. You
Right.
gonna keep the price.
Right.
And what that does is it allows you to generate now a higher profit. But if you're fiscally disciplined, you start accumulating cash. So when those ebbs and flows come, you can
You'll,
withstand them.
you'll be all right.